In this video, I will share with you a crazy accurate strategy for scalping cryptocurrencies you have never seen before. This strategy will generate you consistent profits long term and it will put you in top 5% of traders out there. And to prove these claims, I will test it 100 times on different trading sessions so that you can see for yourself how well this strategy performs over time. So make sure you watch this video till the end and follow the exact rules I'm about to show you. Okay, we're currently looking at the price of Ethereum USD on a 15-minute time frame, and now let's build that strategy step by step. First step will be to go into the indicators section and type in SAR. Then scroll down and select this indicator named Parabolic SAR Buy and Sell. Okay, we got our indicator on our chart, and now let's access its settings and disable buy and sell options. This indicator is perfect for identifying the trend direction. When the bars are green color, this is a signal that the price action is in an uptrend, and when the bars are colored in red, this is a signal that the price is in a downtrend. The second step will be to add an indicator called MACD4C. MACD4C by Squatter. This is a really powerful tool, and based on its signals, we're going to be placing buy and sell orders. So MACD4C is going to be our first confirmation indicator. Obviously, we can't be using this indicator in a standard way as it issues a lot of fake signals. So to minimize them, I came up with an extremely powerful concept. For example, normally the traders would enter a long position once the indicator turns green. In my opinion, this is not the best way of using it because the signals are not strong enough. So if we want to maximize our chances of successful entry, we first need to wait for this white line to cross above the zero level. The second step will be to wait for a light green bar to appear on an indicator. And the last condition will be to have the green bar closed above this white line. This indicates a strong buying pressure and the price action will more likely continue to go in the same direction. Obviously, we can only be entering long positions when the parabolic SAR bars are green color. Notice how well this line filters out bad signals. We see all these buy signals are not valid because the bars are below the white line. By the way, if the first light green bar did not appear above the white line, you do not wait for the conditions to be met on a second one, you simply wait for a new one that usually appears after dark green. For short entries, the rules are exactly opposite. First, the white line on a MACD indicator has to cross below the zero level. Second, the MACD bar has to turn dark red. And if the first bar that turned dark red is outside of this white line, this is a valid signal to take a short position. So as we can see, this concept works really well, but the strategy is not complete yet. So to filter out even more bad trades, we need to add one more tool to the chart. And this tool is called Volatility Oscillator. This indicator by Verifid. I also mentioned that I was going to be testing this strategy on different trading sessions. And for that, we need to add a really powerful indicator called Sessions on a Chart. Okay, now we need to access this volatility indicator settings. And in the start section, let's remove all these labels. The next step will be to open the sessions settings. And in the input section, let's disable the Tokyo session. This means that for our first test, we're going to be trading during London and New York sessions. So we're simply going to skip all the signals our strategy gives us outside of these sessions. Okay, since we have all the indicators in place, now let's understand the trading rules. So here are the rules for entering a long position. First, the MACD white line has to be above the zero level and the indicator has to print a light green bar that is above the line. Second, our trigger candlestick is green color. And third, the volatility white line needs to break above this upper band. We're going to place a buy order at the close of our trigger candlestick and our stop loss will be set slightly below the recent swing low. For this strategy, we're going to be targeting 1.5 times the risk. And now let's see whether this trade is successful. As we can see, the price action easily triggers our take profit target. If one of these conditions is not met at the time the MACD gives a buy signal, we're simply going to skip this signal. Here's another example. So we see the MACD white line is above the 0 level, and the indicator printed a light green bar that is outside of this white line. We see the price action is in an uptrend, and that trigger candlestick is green. And finally, if we take a look at our volatility oscillator, we see that the white line broke above the upper band. So these conditions indicate a valid long entry. Okay, so here are the conditions for entering a sell position. First, the MACD white line has to be positioned below the 0 level. Second, the MACD has to print a new dark red bar that is outside of this white line. Third, the trigger candlestick has to be red color. And the last condition will be to have the volatility oscillator white line broke below the lower band. Our stop loss will be set slightly above the recent swing high. And we're going to be targeting 1.5 times the risk. Here's another example. We see the MACD white line is below 0, a new dark red bar is printed and it's outside of this line. The trigger candlestick is red color and the volatility indicator broke below the lower band. Also, if you want to maximize your chances of success even more, I would highly suggest you avoid taking trades at the candlesticks like this. If the price action is moving this sharply in any given direction, it will often result in a pullback. Okay traders, I hope you have understood the rules for this strategy. Now let's do our backtesting to see how well it performs in different market conditions. Alright, so after 100 trades, the strategy has shown some absolutely crazy results. The win rate is 71% and we increased our account size by 353.94%. The profit factor is 3.67 and we had 8 consecutive wins against 4 consecutive losses. So yeah, pretty amazing results. I definitely recommend this strategy on New York and London sessions. Okay, now let's test it on Tokyo and Sydney sessions. For that, we need to access the indicator settings and enable these sessions. Also in the style section, let's make the background color a bit more visible. Now we're going to be taking trades only during these sessions. If we zoom out, we can see that the market participants are less active during these sessions. The price action is usually ranging at these times, so I'm expecting the results to be a bit worse. Okay, the second backtesting is finished and as we can see the results are a bit different. The win rate has dropped from 71 to 64%. This also affected our profit and loss. The profit factor is 2.67 and we had 10 consecutive wins against 4 consecutive losses. So yeah, these are the numbers you can expect from trading on Tokyo and Sydney sessions. Obviously the results will be different when trading live because of spreads and fees, but still I would say the strategy is pretty amazing and it shows some consistent growth. Okay traders, I hope you enjoyed this video. Make sure you like it as it really helps with the channel. By the way, if you want to see some of the best strategies for trading crypto, check out this playlist right here.